Hi there. Okay, this is going to be video number 73, but number 35 of module 3. Now this video is going to be a little bit more simpler. As you might recall from other videos, this one here is actually the envelopes, but we've applied two instances of the envelopes indicator. First we have, they're both set to a period 14, but one has a deviation of 0.20%. Alright, and it's set to a dark blue. And the other one is set to a red color with a 0.10% deviation, also set to a period 14 and simple moving average. Now the basic rule is that when you see the candle come from below and then close inside this area, like let's get a screen draw pen out. If you see it actually close inside this area, it's time to go long on the next bar, and anytime you see it come when the candles come from above and close inside this area, then it's a sell. Now you could go ahead and you could act on these all the time, or you could go ahead and act when these cross over all the time, but you'll know now that not every single indicator on its own is always going to work out for every single buy and sell opportunity. So we could also use this to further restrict us from making all of the trades that are open to us and only go on the ones when the signals appear. Alright, so this can also limit your losses on the same note and the same token as well. Okay, so what we would need to look for is really a simple rule. Okay, we're looking for a crossover here. The next thing, we want to see where this crossover lines up with our crosshair tool, and want to make sure that whatever candle that it's pointing on, that it closes inside the area. Conversely, likewise, when you see a sell signal comes in when you see the iMACD crossing underneath the signal line, and then you want to bring your crosshair tool up and bring it up as close as you can, but you want it to be a red candle, but you want it to close inside the top part of the envelopes. Alright, now we already know what open and closes are on the candles, yeah? If you don't in this particular, or up to by now, you will do in the next module. Alright, in module 4, which will be candle studies. Okay. Alright, so here we're in an upwards trend. This is a bull bar. Okay, and the open is right there and the close is right there. Then we get another open right here and the close right there. Open, close. And then on a downtrend, you'll see that this is the open and this is the close. This is the open, this is the close, and this is the open, and then this is the close, and so on and so on and so on. Alright, this will be the high because this is the wick's high, or the candle's high, and this will be the candle's low. And these little lines here is referred to as the wick, and this is referred to as the body. Alright, so when you see that this actually closes, this will probably actually qualify, but unfortunately where this crosses here doesn't line up with this one because it's pointing to this candle here. If this crossover was here and pointing underneath that one, then that would be fine and we could have gone in there. Okay, so again, all depending on your trading style, your personality, your tolerance to gambling and stuff like that, controlling your money will also play a role in how successful you are in doing these signals and stuff like that as well. But sticking to just one rule and not pulling away from that rule is also very important. Okay, so don't pull away from a rule when it's there. Now here's a pretty good example that we could use. Look at this. This is actually perfect. A nice perfect signal to give you as an example. We've given ourselves a little bit of a leeway here, although we couldn't actually get this lined up, or can we? No, we can't see. We can't get it bang on perfect where it lines up. But this is good for the most part, and we can see that the close does just barely nick outside that band. You have to give yourself a little bit of leeway with this, because this won't always find that it's will sit inside. You might just see just like a quarter of it or a half of that top part piercing out. If you see that both edges, both top edges are actually poking outside, then don't take it. If one of them's inside, you can see that one of them's actually inside, and that should be okay. Alright, so let's go ahead and find some more It's going to be quite difficult actually, if I can be honest, but these signals are basically, they're bona fide money makers. Alright, I don't really like saying that because it's almost on the verge of the line of saying guarantee. Okay, that's pretty close. It might work out better on a smaller time frame actually. Let's try this on a smaller time frame. Alright. Let's try maybe the 15-minute time frame. Well, there's definitely some out there. It's just a matter of finding them. That's not going to be no good. So, alright, well I can't really find any more, but I mean here's one here, right there, and that would qualify. Alright, so yeah, I mean that's just another little strategy you can use in conjunction with some others that we've already been working on. But as you can see, it's not a very active kind of signal set that we could use, but we can combine it with other strategies to try and pull some more out. Here's one, I believe. There we go. It closes inside and it goes short on the next bar and target the bottom of the or the top part of the second. Like this could be your first TP and that could be your second. So yeah, there you go, short little video, pretty simple strategy there. You can refine this strategy depending on what time frame you're on. We could see that the 5-minute didn't work too well. 15-minute wasn't perfect, but the signals were a little bit, very few and far between. We could try and take a look to see if more signals appear on different time frames. So give that a go, see how you get on. Maybe even try even down to the 1 minute. See how you get on, see if that works for you. Alright, so play around with that for a couple of days, and I will see you very soon in the next video. Bye for now.